Ladies and gentlemen, we will go to the highlighter speech with the topic The Future of Digital Financial Services in ASEAN Investors Perspective. This session will be presented by Managing Director Investment Temasek, Ms. Connie Chen. Ladies and gentlemen, please give a warm welcome to Ms. Connie Chen.
Hi, good morning, everyone. First of all, thank you for having me here to discuss the future of digital financial services in ASEAN from an investor perspective. So at Temasek, we're quite excited about the long-term prospects of digital financial services in the region and have been tracking the market actively for potential investment opportunities. This year is significantly noteworthy as we witness the acceleration in adoption of digital financial services as well as the overall resilience in the digital economy, despite the significant challenges from the pandemic. For the past 5 years, Temasek has published, along with our co-authors Google and Bain, a report called Southeast Asia Economy, which focuses on digital economies in Southeast Asia. So today, I'm happy to share some of the findings from that report, as well as share some of our perspectives as an investor. We move on to the next page. So I'll start by describing some of the factors and trends driving acceleration of digital financial services. Next page. So starting with consumers, COVID-19 has really brought a change in behavior. There was a significant shift away from cash and also increased trust in online transactions. On the business side, the pandemic really somewhat forced merchants as well as SMEs to migrate online, which effectively lowered the barrier to using digital payments. This is something that had existed for a long time. And with that, really creates a virtuous cycle with more merchants and more consumers coming online, creating a better digital footprint on both sides, which will eventually allow better data capture, which enables credit underwriting, as well as expanding into other parts of financial services. I think importantly, regulators have played a very pivotal role in supporting this. They supported the adoption of digital financial services, also encouraged consumers to transact digitally, and many regulators in the region also laid out critical infrastructure to promote the growth of digital financial services, such as eKYC, digital identity, as well as fostering some innovation, for example, with the introduction of digital banking licenses. If we move on to the next page, so you can see that many of the DFS verticals have continued to grow this year, despite the challenges coming from the pandemic. And we believe in the long term that digital financial services in Southeast Asia will remain very strong. And I'll share some of the observations that we see in each of these verticals in the following slides. On the next page. So starting with digital payments. So overall gross transaction value shrunk this year due to lockdown restrictions. But if you take a closer look at the differences between pre-COVID and post-COVID, the average number of cash transactions by consumers actually declined from 48% before COVID to only 37% post-COVID. Another notable trend is the growth in e-wallets. So many of the e-wallet players are seeing strong organic user growth, also very high user engagement. This is aided by more merchants now accepting these digital payments. So as a result, the e-wallets GTV is estimated to increase by more than 100% this year, which will make up around 3% of total C2B payment value from only 1% last year. And obviously with these levels, there's still very much ample room for further growth from here. Moving to the next page. So on cross-border payments, this is another vertical where we see a surge in adoption. So movement restrictions in many countries as a result of the pandemic have resulted in strong adoption of digital remittances. So you can see downloads for key cross-border remittance apps actually increased 30% this year. And many of the employers started paying their workers electronically, also helping them to send money home to their families in digital form. I think given the relative convenience of digital remittance and now the increased trust in these service providers, we think this customer shift from offline to online will be here to stay. On the next page, we take a look at digital lending. Now, digital lending has been set back in the near term by credit quality concerns, also funding constraints. So governments across the region have intervened through loan moratoriums, loan restructurings, or interest rate adjustments. And given the weakened business activity, also reduced income, banks, as well as the investors that were funding the fintech loans, have become extra cautious. But we think that lender confidence will remain weak in the near term due to these asset quality concerns. But however, in the long term, we think this growth prospects will continue to remain strong. I think the current cycle will put many of the credit underwriting models to the test. And those who survive this current crisis, improve the performance of their underwriting models, will come out bigger and stronger. In addition, the data available through payments and other digital activities will further strengthen the industry's ability to price loans by using this richer, non-traditional set of data. Moving to the next page, onto insurance. So digital insurance is expected to see around 30% growth this year, which is partly helped by increased demand for life as well as health policies, as consumers become more risk aware and risk conscious. So these products were actually historically very challenging to sell online, but we're seeing this meaningful shift in consumer behavior during the pandemic. In addition, partnership between established insurers as well as consumer platforms have spurred innovative products, such as bite-sized microinsurance, which has higher conversion potential, just given the smaller ticket size, but also the ability to serve and protect the underinsured customer segments. So moving to the next page, I guess the big question is, with all the changes that took place this year, the question will be, is this trend and are these changes to consumer and merchant behavior here to stay? Well, based on a survey that we had commissioned, the answer is yes. 93% of new consumers of digital services responded that they will continue using at least one digital service, even post-COVID. I think another data point that's interesting is comparing the average hours spent online before, during, and after the lockdown. Even though the post-lockdown time spent online is lower than while we were all in lockdown, it's still about 20% higher than pre-lockdown, which indicates that users are much more engaged online even after these lockdown restrictions were removed. Just moving to the next page. So in the next section, I will talk a little bit about how we see the digital financial services landscape evolving with a particular focus on platform players. Move to the next page. So last year, in our Google Temasek Bain report, we had defined consumer or digital financial services players into four main architects. One of them is pure play fintech companies, as you can see in the top left quadrant. So these are players that are more nimble, early stage companies with a specific sector focus. The second type are established financial services players that you can see in the lower left quadrant. So these are incumbents like banks that provide digital financial services through digitizing traditional offerings. The third type are consumer tech platforms in the upper right-hand corner. So they offer services like e-commerce, ride-hailing, or social media as their core product, but then expanding into digital financial services in order to strengthen the engagement with users, as well as monetize their customer relationships. And then lastly, in the lower right-hand corner, are the traditional consumer-oriented sectors like retail, airlines, telcos. These are all companies that have very large customer bases and are also interested in offering digital financial services to their customer base. We move to the next page. You can see that the space is undoubtedly crowded, right? And we're seeing that the lines are blurring though between the archetypes because there's more and more increasing collaboration and partnership between the different players. For example, consumer tech and established consumer platforms, i.e. the right side of the page, they want to leverage the financial know-how of the incumbents as well as the pure play fintechs to establish financial products and services that are suitable for their customer base. On the other hand, we have pure play fintechs and consumer tech players, i.e. the top of the page, working closely with banks who can provide stable funding, which is critical to scaling any lending business. On the next page, just sharing another trend that we're seeing is that online platforms moving from their core product and services and expanding into digital financial services as they look for other avenues for growth and monetization as part of their path to profitability. So digital financial services, especially digital lending, is now viewed as a critical value driver. For example, companies like Gojek and Grab, who initially started with transportation and moved into food delivery, also view digital financial services as a core focus area. And similarly, e-commerce players like Shopee, Tokopedia, and online travel players like Traveloka also have a strong focus on digital financial services as part of their offerings. In the next page, you can see that in the process of building out a full suite of digital financial services, many of these platform players started with an e-wallet offering, which helped them build up the user base with high transaction frequency. And from there, many of them offer short-term lending products to start with, often tied to purchase scenarios like a pay later product. And these kind of products help to increase the purchasing power of the consumer, increase the success rate of the actual purchase transaction, as well as generate additional revenues. And then relatively speaking, insurance and the investment verticals are less developed compared to payments and lending. Most of the players we see are actually working with product manufacturers to distribute these products as opposed to manufacturing it themselves. This helps them maintain an asset-light model as well as benefiting from the high distribution margins. So as digital financial services can be embedded in the customer's journey while consuming a digital service, we find that pricing may not be always the critical factor. And consumers are actually rather influenced by the transaction scenario in which the digital financial service is being embedded, as well as product suitability for the consumer themselves and how they see the differentiation. We go to the next page. I'll just summarize in summary how we think the digital financial services landscape will continue to evolve with the following trends. So first, we do think that consumer tech platforms are very well positioned to gain market share, especially in the key battleground, which is underbanked segment. These consumer tech platforms have access to millions of customers as well as businesses, which will be very challenging for incumbent financial institutions or pure play fintechs to build themselves or match. These consumer tech platforms also have better user engagement and as a result, more and better access to data on their customers. The second observation would be that we think that market share shift will continue to go from the digital laggards to the digital leaders, which will make it very urgent for incumbent players to digitalize their product offerings as well as their product channels. And with the significant increase in adoption of digital services by consumers, especially this year, consumers now have higher expectation as well of their digital experience. The third point would be that the role of balance sheet, strong balance sheet as well as funding stability will remain very important in terms of scaling and the sustainability of any digital lending business. And lastly, partnerships. Partnerships with players that can fill the gap in capabilities will be increasingly important. We're seeing more and more banks, for example, keen to work with consumer players to get access to consumers that they could otherwise not reach. And then likewise, we'll also see consumer players very interested to work with banks as funding partners and also as providers of underwriting capability. Move on to the next page. So in the next section, we'll speak a little bit about some of the trends that we're seeing in terms of equity fundraising in the digital economy players. Starting with the next page. So you can see on the chart on the left-hand side, investments in Southeast Asia digital economy companies continue to flourish. The number of transactions increased by 17% year on year between first half 19 and first half 20. And the chart on the right shows the same data for Indonesia alone, which also shows very robust investment activities. We move on to the next page. We're just zooming in on equity fundraising in the Southeast Asia fintech sector. The story really remains the same. So deal value surged to a record high of 1.7 billion US in 2019, which is a 40% jump from 2018 levels. More investment and consolidations are expected to happen in the coming years as financial as well as strategic investors capitalize on the fast-growing digital financial service sector. On the next page, just some observations about what we see in the market from investor perspective. We do think that going forward, we'll expect probably more caution on the part of investors with a recalibration towards sustainable and profitable growth. So investors will refocus on positive unit economics as well as path to profitability versus only focusing on GTV or user growth. But having said that, we also observed that dry powder reached record highs in 2019, with investors holding on to substantial capital going into 2020. I guess, obviously, in this current climate, different investors will have various investment strategies. We'll continue to see the strong leading companies be able to get funding at premium valuations. Lastly, on the valuation front, we do expect a continuation of divergence, with premiums paid for those companies, the leaders, with sizable customer reach, sustainable growth, as well as a path to profitability. And then on the next page, this is the last page, really, where I'll just sum it up in terms of our observations of the sector. Again, first of all, we're very excited about the long-term prospects of digital financial services in Southeast Asia. I think the region's uniqueness comes from the large underbanked and unbanked population that are yet digitally savvy. And they make up nearly 50% of the overall population, or 200 million people in total. And as a long-term investor, Temasek is very much focused on secular trends as opposed to just cyclical drivers. And yes, the pandemic have affected near-term macroeconomic situation and also near-term growth of certain verticals in digital financial services. But at the same time, it has accelerated the penetration and adoption of digital financial services across all countries. And we think that this secular shift is here to stay. We also see that the SME merchant segment as a relatively untapped segment, and companies will probably focus more on this going forward due to better unit economics compared to the consumer side in most cases. Another observation is just across all digital financial services verticals, lending is the largest revenue pool and competition there is intense. In the current pandemic, we do notice a shift in terms of focus from volume growth to actually better risk management and funding stability. I think the current cycle that we're facing today will provide an opportunity to differentiate good underwriting models and really putting them to the test during this cycle. Third is, I guess, among the various ingredients to success, we think that scaling requires access to a large customer base, whether it's through your own customer base or through partnerships. Equally important is execution. So platform players, as we talked about, have an inherent advantage with regards to large customer base. But we're also seeing varying degrees of success, which shows the importance of focus, strategy, and execution. And lastly, continued regulatory support in terms of promoting innovation and infrastructure investment will be very critical to the growth of digital financial services. Equally important is the financial inclusion agenda, especially for the unbanked and rural customers. And this will also require policy support as well as incentives to really unlock the full potential of this segment. So in summary, we see a very promising future for digital financial services in Southeast Asia. We're very excited to be part of this journey as active investors in the region. And this concludes our thoughts on this. Thank you very much.